from the SBI Live studios. You are watching it with me, Kanishka Sarkar and Ankita Saxena. This is a show where we'll take all your stock-specific queries with our experts. But before that, a quick look at how the markets are faring at this point. Ankita, a pretty good day coming in. That Dalal Street is cheering that Fed rate cut move. It seems we're holding above that 25,400 mark. It's only the energy sector that is still in the red. Apart from that, all other sectors are in the green, with IT holding up really well.
Yes, absolutely, Kanishka. There's a D Street chair also is cheering on the 25 bips rate cut that happened yesterday, after the FOMC meet. In fact, we are above the previous session's close. We are trading comfortably above the 25,430 levels. In fact, we're maintaining those levels. There is no selling pressure that we're seeing as of now. So Nifty is holding on to those levels. Nifty Bank is also doing well. That is trading with gains of 0.5%. 291 points is what the Nifty Bank is seeing right now, an uptick. The broader markets are also lending support to the rally. We do see mid caps that are trading up 0.3% and small caps that are yet again outperforming the frontline indices. And remember, small caps have been on an outperformance spree, and today also they're trading with gains of 0.5% coming in. But as far as the sectors are concerned, of course, the rate-sensitive sector, IT, is, cheering the Fed move of 25 bips rate cut, and Nifty IT is the top gainer for the day, with gains of almost 1% in trade. LTI, Mindtree, Infosys, Wipro, Mphasis, all of them are trading with gains of 1.5+%. Nifty Realty and Nifty Pharma are also doing well. Now remember, Nifty Realty is another rate-sensitive sector that is trading with gains of more than 0.5% in today's trading session. On the losing side, we just have Nifty Energy that is playing spoil sports today with cuts of 0.2%. So Nifty Energy is the only pack that is trading in the red. Couple of other buzzers then. We have, of course, the Nifty bigwig Infosys that is leading from the front on Nifty 50. We also have HDFC Life, Eternal, SBI Life, Wipro and HUL that are the top Nifty gainers as of now. We also have a couple of other buzzers, a couple of names that are in focus on the back of news flow. We have Hindalco that is in focus on the back of a fire incident that took place in the Novelis plant. We also have Natco Pharma that has got a US FDA has issued an EIR classifying their Hyderabad facility. So Natco Pharma is in focus. Biocon is in focus on the back of getting a US FDA approval. We have a couple of other names on the back of brokerage. We have Samvardhana Motherson that is in focus on the back of brokerage note coming in. Sun Pharma again on the back of a note by Citi. So these all counters are buzzing, are in focus on the back of brokerage notes. But largely, it's a good day coming in. The market breadth looks positive. India VIX has cooled off. It's down 2.6% right now. 9.99 is where India VIX is sitting at. And the advanced decline ratio is clearly tilted in the favor of advances. Kanishka.
That's right. So a lot of stock-specific action as well, with all sectors right now trading in the green except Nifty Energy. But moving on, let's get started with all the queries then. Requesting our viewers to share your queries. The number is flashing on your screen. Do write to us to get investment analysis on your holdings and tips for fresh buys in the market. Don't forget to mention your name, your stock name, your holding time horizon, and your specific stock query. And today, to answer all your queries, we are joined by Kunal Bothra, who's joining us from our studios, and also we have Sharmila Joshi on the fundamentals. Hi, both of you. Very good morning. Thank you so much for joining us today. Let's get started with all the queries. Then, Kunal, let me come to you first. I can't tell you how many viewers have written to us. When is Kunal coming back? So I'm, guessing many of them are going to be very, very happy today. So the first query is for you. This one is on Tata Consumer. Kumar is writing to us from Bangalore. He has 100 shares of Tata Consumer. His average price is 666 rupees. He wants to know whether he should continue to hold the stock or exit at this juncture.
Thank you so much for that, Kanishka, and thank you so much, Ankita. So, I think on Tata Consumer specifically, I think it's a fantastic chart. We are at a phase where many of the FMCG stocks are making a very strong comeback. So I think in that sense, I strongly believe that names like Tata Consumers, they would stand to be, a lot more positive from a medium to long-term perspective. And for stocks like Tata Consumers, I think you can't have a short-term time horizon. You need to have a long-term time horizon, because only, if you give these larger cap formidable names, time period, that's where they would start to show those compounding effect on your portfolios. So I think in that sense, I would believe that Tata Consumers is a good hold from a long-term play.
Right, a good hold from long-term play as far as Tata Consumers is concerned at the charts. But another name from the consumption pack, the next question is coming from Narayana Reddy from Warangal. He says he has 90 shares of Trent at a buying price of 6,500 rupees. He wants to know if he should book his loss or wait for his rate for him to recover his losses. This is for the next 6 months. What is the target? So, Kunal, I'll come to you for the target. Now, Trent has seen considerable drawdown, but because the consumption play is going to be back in action because of the GST rate rationalization, and fundamentally, Trent is a stronger company to hold. What would be your view for it? Should he be holding it for more than 6 months, or will he be able to recover his losses in the next 6 months?
See, I doubt so. I'll give my honest opinion over here because my sense is that when the stock was moving to that 6,000, 7,000, 8,000 kind of a move, last year or so, I was of the anticipation that it's run up exceedingly high and it's bound to go into a major price-wise as well as a time-wise correction. I think that correction will start to play out for Trent over the short to medium-term charts. I would probably sense that maybe there could be more further legs of price correction as well as a time correction. So, but again, nothing to take away that it's a quality chart, something which has done exceptionally well over the last, I think, 5 years or 10 years or so, where the stock has given more than 10x kind of a return. So long-term wise, yes, the stock may look attractive, but since you purchased at a higher price, I would suggest maybe not an exit at current levels, but, look to add, on more strategic dips for the stock price. So I think currently, if I'm not wrong, the stock is placed at 5,000, 5,200 kind of a band. Just wait out for a point where the stock may drops down to say 4,750, 800 mark. I think if I'm not wrong, this was the previous swing low for Trent on the longer term basis. So try and use those, sharp corrective phases as an opportunity to try and add further and build on to the stock from a long term play only.
All right, so 4750, those are the levels at which you can add more and build Trent for a long-term perspective. That's the view coming in. But moving on to the next query, we have our caller, live caller, Shri, joining us from Bangalore. Hi, Shri, very good morning. Please tell us what's your query.
Thank you. My query is for the short term. I bought 1,000 shares of BEL at rupees 400 in July. Should I book profits now or wait for another month? What would be a short-term target for this stock? Thank you.
Okay, so short-term view there, we'll also come to you, Sharmila, for a fundamental check. But before that, a quick technical chart check with Kunal. Kunal, what do you think Bharat Electronics? Do you think for a 1 month period, what do you see on the charts for this one?
See, I think from a 1 month period, maybe I think 416 thereabouts could be a target for Bharat Electronics. And I think in that sense, I would probably look at say a two-pronged strategy over here. The reason why I'm saying is because the last 8-10 days, you've seen many of the defense stocks moving up significantly higher. So there would be a point where the stock would come back into an overbought territory. So maybe I think closer to 410, 412 mark. For the stock, you may try and book par profits over here, and then closer to 416, 420 range is where you can look to book out the second tranche of profits, because my sense is that the stock would just about try and spend a lot of time over here and try and be a little bit more volatile than what has been in the last 8 to 10 days. So I think purely in that sense, and since your time horizon is very restricted towards 3-4 weeks broadly, then I would believe that 416, 420 could be the best upper side for the stock over the near term.
416 to 420 could be the possible upside. But Sharmila, let me come to you for BEL. Now, BEL is one of the strong defense plays, but like Kunal mentioned, the defense counters have been in focus for the last few trading sessions. They have been running up. In fact, in general, also BEL has run up quite a bit. In terms of valuation, do you see the valuations to be a bit stretched, or for a long-term perspective, perhaps somebody who wants to get into the defense play, how would you look at BEL?
Clearly from a longer term perspective, the stock is a hold. There is no denying the fact that it looks expensive at this point in time in terms of valuations. But I think the two things that you need to bear in mind here are that their order book is very good, and their orders are long gestation sort of orders. So it takes time for those things to reflect in the profitability. And that has always been my point when I talk about defense, that don't get carried away when you see suddenly stocks running up, but look at what the order book is, how long, what kind of visibility they have, and then invest. So that is, I think, one point which is completely in favor of BEL from the longer term perspective. And I think again, more than valuations, if you were to look beyond valuations, then this applies to the entire sort of defense space. The kind of geopolitical situation that we are seeing around the world, and the kind of things that are happening on almost every year we are seeing some or the other incident happen somewhere in the world. So from that perspective, I think defense becomes a very sort of a significant sector from the long term. So, maybe if you had asked me this question 10 years ago, I would have said that you need not have some sort of investment in defense. But now I think it is sort of it's a sector that you should have some sort of exposure to. And then from that perspective, again, I think BEL would be one of the names that I would recommend.
All right, so BEL, a good play for the long term from within the defense sector. That's the view coming from Sharmila. Hope, Shri, your query was answered both from a technical and fundamental perspective. But moving on, it's time for a quick break. But before that, a quick look at an exclusive interaction with AT Now. Now, the DFS Secretary M. Nagaraju has opened up about how the GST cut on insurance products is going to increase the penetration in the market, urging new buyers to flow in. He also mentions that insurance players have assured that the benefit will be passed on to policyholders. Let's listen in to a slice of that exclusive conversation.
The GST, removal of GST on the individual insurance products is a very big announcement by the government. And the government has been engaged with insurance companies, both private and public. And DFS held a meeting 2 days ago with the insurance companies on their proposed action in view of the GST reduction. And all of them, including the private sector, have assured us they'll be passing on the benefit to the policyholders. Most of them have come out with advertisement clarifications to the public, and we hope that policyholders are future people who want to buy insurance products. They'll be encouraged with the reduction in the policy premiums and buy more insurance products.
And so it's a very big game changer move to achieve the insurance for all target, which is government's move, DFS mission and vision, and the insurance penetration will increase after this move.
We definitely think so. We need to have broader coverage of entire population with insurance. This move will benefit lakhs and lakhs of people who want to buy insurance. This will encourage, and along with this, we are also taking a campaign to educate and create awareness for the various benefits of insurance products to the population. And I think this is already successful. This quarter, we have seen growth in the premium and new policies also.
Okay, so my last question, so Bima Sugam official website is launched. How big development is this? Because Bima Sugam will completely democratize the insurance in India.
We would like to have this by end of this year. Fully integrated portal where everybody will be on it, and that could be one of the game changer in the insurance industry in the country.
Bengaluru. Hi, George. Thank you so much for joining us today. Tell us, what's your question?
Hi. My question is regarding the Patanjali Foods. I hold 90 shares of Patanjali Foods at an average price of 290. For the last 3 years, I'm holding. I need an advice whether to hold the same or sell. Thank you.
All right, Patanjali Foods. Sharmila, let me come to you for the fundamentals first. For the longer period of time, Patanjali Foods from the consumption pack. Now, fundamentally, Patanjali Foods have been, at least the analysts say that Patanjali Foods on the fundamentals doesn't look very good. But for the long term, what are you penciling in? And then we'll come for a tech check for Kunal as well.
Also, from the longer term perspective, it's a hold. While I do agree that the valuations are high, our investors has bought at a really good price. So I don't really see any reason, especially because of the GST cut, a lot of products are going to benefit, and I'm sure Patanjali Foods would also have products within their range which will benefit from the GST cut. Also, the way monsoons have been, FMCG companies have been under a bit of stress in terms of volume growth, etc. But now that we've had such good monsoons, maybe there will be a pickup in the rural sector, and you could see volumes improve. So there are a couple of points that make it sort of a positive time to be invested in FMCG. So I think it makes sense for him to continue to hold, given that the price at which he has bought at is so attractive. So I think I wouldn't recommend a fresh buy, but definitely if you have the shares, continue to hold.
So for the longer period of time, Patanjali Foods is a hold for now. But with that was the last query for the day. Sharmila and Kunal, thank you so much for taking the time out and joining us today. And well, let's move on to the top headlines then. The big headline